Hey everyone, welcome back to Corporate Decoder. Today, AHCO just filed an amendment to an 8, and there is a correction and a compensation update that catches my eye. Quick note, this is not financial advice, just my take on public filings for educational purposes. While the original filing had a minor date error, this amendment reveals a significant pay bump and a new stock grant for their Chief Operating Officer, which tells us something about their internal confidence. So, this filing is an amendment to a previous report filed by AdaptHealth Corp, trading under the ticker AHCO. The original filing was about the appointment of Daniel McFadden as Chief Operating Officer. However, there was a small hiccup. The date of the report on the cover page was listed as May 5, 2026. When the earliest event actually happened on May 4, 2026, this amendment is here to fix that little date slip up, but that is not the most interesting part. This amendment also provides some crucial previously undisclosed details about Mr. McFadden's compensation. Essentially, the company is going back to clarify and add important information to a prior announcement. Think of it like a journalist issuing a correction or an addendum to a news story. The original filing announced Mr. McFadden's appointment as COO effective May 4th. This amendment is correcting the report date to May 4, 2026, to accurately reflect when the event occurred. Now, let's get to the juicy part regarding Mr. McFadden's compensation. On May 27th, the Compensation Committee, which is the group that makes decisions about executive pay, approved a pretty substantial raise for him. His annual base salary went from $410,000 to $550,000. That is an increase of $140,000, or about 34%, and importantly, this raise is retroactive, meaning it applies all the way back to his appointment date of May 4th. This gives us a clue about how much the company values his new role and likely their expectations for his performance. Beyond his base salary, Mr. McFadden is still eligible for an annual bonus, and the target amount for this bonus is set at 100% of his new, higher base salary. So, if he hits his targets, he could potentially earn another $550,000 in bonus on top of his salary. For the current year, 2026, that bonus will be prorated based on the actual salary he received. This structure aligns his incentives directly with his overall compensation. Perhaps the most significant part of this compensation package is the one-time grant of restricted stock units, or RSs, valued at $464,110. RSs are basically a promise to give someone company stock in the future, provided certain conditions are met. This is a substantial award and shows the company is investing in retaining and motivating its new COO with equity. To break down the RSU grant further, half of it will vest over 3 years, meaning he'll receive portions of it each year for 3 years. The other half has a performance component. It can vest anywhere from 0 to 200% depending on how the company's total shareholder return, or TSR, performs compared to its competitors over a 3-year period starting in February 2026. This ties a significant chunk of his potential compensation directly to how well the company and its stock perform relative to its peers, which is a common and good practice for aligning executive interests with shareholders. Now, looking at external context, AdaptHealth Corp, ticker AHCO, operates in the healthcare and medical devices sector. It has a market cap of about $1.3 billion, and its stock price has been trading around $9.72 recently, with a 52-week range of $8.06 to $13.43. The company employs over 10,000 people. There have been some recent headlines, including some negative ones about shares sliding in early May and Nose. Diving back in February, there was also news about AdaptHealth's large member rollout, incurring significant labor costs. On the flip side, we see institutional investors like OEP Capital Advisors and BlackRock holding substantial stakes, suggesting they see long-term value. This report is signed by Jason Clemens, the Chief Financial Officer on behalf of AdaptHealth Corp, dated the 1st of June 2026. This signature indicates the company is formally acknowledging and filing these amendments and compensation details with the CC. So, what is the big takeaway here? While the initial report had a minor date error, the correction and the added detail about the COPU's compensation package are telling. The significant salary increase and the large performance-based RSU grant suggest that AdaptHealth Corp is investing heavily in its senior leadership. They are essentially betting on Mr. McFadden to drive future performance, especially relative to competitors, given the structure of his equity award. The company is signaling confidence in its ability to hit targets, and they are tying executive compensation to that success. While the recent stock performance and news about labor costs provide some headwinds, this compensation adjustment for a key executive indicates an internal belief in the company's trajectory and its ability to execute its strategy. The risk I am watching is whether the company can translate these leadership investments into tangible improvements in its operational efficiency and stock performance. especially given the somewhat volatile recent stock action. What I am actually looking for is how this compensation plan translates into actual operational results and market share gains. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.